Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply talks with another video, and this time this video corresponds to Zomato and Swiggy. So we'll discuss in detail about this capitulation that is taking place in both the stocks, and after Zomato's results, Swiggy has been bashed around, and as well as the markets. The markets are trending lower day after day, and for the last 2 months, we are seeing only a downward spiral from November onwards, and from September. This has been more than 3 months, nearly 4 months, that the Nifty is trending lower. So we'll discuss about that as well. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should there with their own due diligence and research, and I'm not in favor against any company that I talk about. I'm not a member of the NSC and BSC, and that I am not a portfolio advisor. Whatever decisions with respect to markets or investments you take, kindly take that on note that it is laden with market risk, and whatever investment decision or trading decisions you take, kindly do consult your financial advisor. Now, before I talk about these companies and the markets, here's one request: kindly support me on Patreon. Once you do that, help me grow this channel. Help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, uh, discussions on domestic and global economies, analysis on different companies, long-term pick from my end every week as the markets are trending lower. So there are companies that are coming up with the better valuations, and whatever queries that you're having, I'll be answering that. So check the link in the description. You can be a member on YouTube as well, or on WhatsApp, or on you can say Patreon. Now, in order to discuss about the markets, let me take you to the TradingView website first. So let's just discuss a few minutes on the markets. So we have the CNX 500 index also here, and which is down now big time. It is down 3,000 points from the highs. It is down 15%. So if I take this, 24,600 has become 24,300. So 21,300. So that's a 3,300 fall from the high. We have the mid cap index, which is trending lower again, and this is the crucial level. So if you see here, on 13th of Jan, it made a low of 52,200. We had at 52,700. So if we break this, we are headed lower. And if I go back, probably, and this is a weekly 5-year chart that we are looking at. So if you look at the weekly 5 year, because now we are looking at long term as to how things have broken down. So we are at an RSI of around 3940, which is even lower than the RSI of March 23 when we bottomed out. So when we bottomed out, the RSI on a weekly basis was around 41, 42. Around 41, we are at 39. So this is extreme pessimism in the market. And we go further back to June, and in June we had an RSI of around 36 or so. So I think we are headed towards the pessimism of June 22. And if we get there, the valuation would be extremely attractive. So the mid cap index is down from 61,000 all the way to 53, 52,700. So if I take that, so 60,900 has become 52,700. So that is a fall of around 14%. And if you look at the small cap index as well, or the BSC small cap index, which is at 50,500, it is also at a very crucial stage. 51,000 was the 50-week moving average, and that is getting hit big time. We are at an RSI of 41. In 2023 March, we had a similar RSI of around 3940. So we are headed there. So really, we are on the cusp of a major breakdown. Having said that, if you look at a 1 year chart for the BSC small cap, you'll understand that last, you can say, dip, when the last big fall happened, the high was 48,300. Before that, 48,900. So this 50,000 mark is extremely crucial. I think below this, the market should find support around these 48,000 levels. I think between 50,000 to 48,000 on the BSC small cap, we will find support. Coming to the Nifty, which is around 23,000, it is not showing you the full picture as to how the carnage is taking place in the mid and small cap domain. The mid cap index is down over 2%, small cap likewise down 2.5%. And I think this should continue for the next month and a half at least, and then the recovery should take place. This is a market similar to what happened in 2018 and 19. But at the same time, I don't think this carnage could continue for 1.5, 2 years. I think this should continue for 2, 3 months more, and we should see a better recovery because things happen extremely quickly nowadays with algo trading and other things. So overall, I see that I don't see more than 2 to 3% fall on the major index, that's Nifty. I don't see more than 5 to 6% fall on the small cap index. So from 51,800, which was the high, if I take a 6% fall from there, then we are looking at a fall of around 3,000 points. So around 48,000 or so, we should be fine. I think around 48,000 we should bottom out on the small cap index, and that would be around that would be down by somewhere around 17%, 17, 18% from the top. So that's what I feel. We have seen stocks go down 5, 6, 8, 10%. We'll discuss about now Zomato and Swiggy. First of all, about the charts. So let's just discuss about Zomato and then we'll come to Swiggy. So Zomato is trading at around 210, 211. It opened lower. It opened around 207 or so. Yes, 207. It dipped to 203 and then buying has come in. So the stock is down 32% from the top. It's down 32, 33% from the top in a very short while. So actually Zomato was around 260 just about a week back, and in a week's time from 260 the stock is at 200. So the stock has fallen somewhere around 22, 23% in a week. And my feeling is that it is overdone. The selling is overdone. I'll come to the fundamentals in a bit, but if you look at it, and if you look at the long-term chart of Zomato, I think 185 is your major support now. So from here on in, I don't see more than 10% fall from here. Maximum 10% fall in Zomato. And if you have more than 1 year time frame, these are very good levels to get into. And now I'll tell you why. So if you come to the numbers of Zomato, what has triggered this sell-off are not the numbers, but the commentary and the fact that the stock has finally come to, you can say, has again come to losses on the food delivery business, has come to on Blinkit, sorry, losses on Blinkit, and food delivery business is showing signs of stalling it a bit. But what we do see and what you need to understand is that since the competition is getting tough with Zepto and other players coming in, Zomato had to take the leap and expand big time, and that's what the company is doing. So this is nothing wrong in this. And also, I want to make a disclaimer that both Zomato and Swiggy is in my portfolio. So my you can say point of view might be biased, but at around 2 lakh crore of market cap, let's just understand the valuation. Now, people are talking about the fact that a loss making company cannot be at 2 lakh crore and many other things. But we have to look at the stock retrospectively, relatively, as to how things were going on earlier. So, if we take market cap to sales as a criteria in here, it was trading at a market cap to sales in 2023 at around 7 times, 7.5 times or so. Let's say 7.5 times. And today it is trading at around 11 times, 11.5 times. Now the peak it just recently hit was around 18 times that it was trading at in December, 1 month back. And from 18 times it has now dipped to 11 times. Now, if you look at the sales numbers, now let's just come to the numbers part. Uh, what the company has done on a consolidated basis is that sales have grown by 66%, 5,400 crores versus 3,200 crores. Operating profit has grown from 51 crores, has gone up to 162 crores. Now, if even if we take 3% margin, and the company has come out and said that the margins could stall here around 3%. So let's say if the margin completely stalls around 3%, although it should go up a smidgen, but let's say 3%. And if the sales growth remain around 60% or so, then the March quarter they did around 35-60 crores. So if I take around 63% of that, 5800 crores is what I'm looking at in March for the business. So 5800 crores, 3% margin, 174 crores as the operating profit versus 86 crores. So this is a growth year on year, and we have to look at these businesses year on year. The reason for that are seasonality. So there have been festival months like October, November, December, etc., non-festival months like Jan, Feb, company does in both those. So you cannot, you can say, equate both, that okay, March quarter should be better than December. It cannot be. March quarter on a longer term basis might not be much better than the December quarter because of the festive season and many other things. So the point of contention has been the bottom line. Coming to the other income part, that has also done well, from 219 crores grown to 250 crores. So we are expecting this to go up to say something around 275 crores or so. So overall, on the sales front, they might do something like 5800 plus 275, 6075 on top of what they are doing. So if I compute the numbers that I have done earlier for many other companies, and let's just talk in detail as to what Zomato is going to do probably this year, that is FY25, how the exact numbers on the sales front would pan out. So that would somewhere be around, I would say 20,000, 21,000 crores. That's pretty big. So if I equate this again, 5800 plus 5405 plus 4800 plus 4206, and then so that's around for 20,000 crore sales already. So around 21,000 crores, if I take into account the other income part, 21,000 crores is your sales for FY25. And the market cap of the company currently at these prices of 210, 214, 15 is trading at around 2 lakh 6,000 crores. So 2 lakh 6,000 crore is the market cap, 21,000 crores is the sales. It's trading at 10.8 times uh, current year earnings. Not I'm not saying forward or anything. Now, if I take on this 21,000 crores, even a 50% sales growth, I'm not saying 66, it was doing 75%. I say okay, 50% sales growth. Then we are looking at a scenario where the company might be doing 31,500 crores of sales. And if I take current valuations of 2 lakh 6,000, we are looking at a scenario that the company would be trading at 6.5 times 1 year forward, not 2 year, not 3 year, but 1 year forward time sales, 6.5 times. And that is where I feel Zomato is extremely attractive. It's not trading at 13 times, which is the median market cap to sales valuation. In fact, it's trading at half of that valuation of 6.5 times. And even in March of 23, when it bottomed out around here, it was trading at 7 times. So I think around 200 price wise correction might have taken place around 200. It's extremely attractive in terms of that. Coming to the fact that okay, they might not be profitable for 2 3 quarter, let's say this year they are going to do less and less profit. So this 59 crores may go to say 10 crores, then 60 crore loss, then 150 crore loss, and all that. So eventually what they will end up doing is around 100 crores of losses. So if you look take into account year on year numbers, from 970 crores of loss in FY23, they came to 350 crores of profit and now 100 crores of loss. But I'm pretty confident that after 1 year, the company should turn this around. Why I'm confident is that what Zomato is trying to do is become one or at least one of the two players that could be in the market. And I'll talk about Swiggy in a bit. But Zomato, in my opinion, is doing the right thing from a longer term point of view. From a shorter term point of view, I think in the next 3 months, 4 months, the stock could go up to 240, 245 and come back to 200 levels. That is the kind of volatility that I feel that the stock might be having. But from a 2 year, 3 year perspective, Zomato might end up being the big, you can say the big brother of this industry, and is trying to do that because we have Amazon, we have Flipkart, we have Zapto, and there are other players that have come in. Reliance has come into the picture, and so Zomato needs to put on the you can say foot on the throttle and really get things going. Uh, Unless they do that, they will fall behind, and then you would be in a situation where, because of this industry being so price sensitive, that very less players will be in the market. Hence I believe that the strategy of Zomato is correct in trying to expand quickly and get that you can say user base to increase, get that customer base to increase, even if that means that we spend some amount of cash on it. Overall, once that happens, then we could be ending up with two or maximum three players in the markets, similar to the telecom industry. And look at what Jio and Bharti Airtel has come about for shareholders with respect to the kind of revenue that it is generating. So I'm not saying that this is akin to this. Zomato is already cash positive and earning pretty well in their 2 3 businesses. It's just that we are having a 2 3 quarter blip, and this is probably, in my opinion, an opportunity. Again, a disclaimer: I have the stock in my portfolio. I have increased positions in these companies, Zomato and Swiggy, over the last month and a half. But that's a disclaimer. But what I feel is that the stock is down. The valuations are no longer the same as they were at 305. So if you look at it, currently it's trading at, as I mentioned, 6.5 times sales. If I take at 2,50,000 crores, it was trading at somewhere around 7.5, 8 times forward sales. So uh, I think we could be in for a big move after 7, 8, 9 months, and the stock may just gyrate between 240, 225, 200 in that period. Now coming to the Swiggy thing. Uh, so Swiggy has been bashed similarly because there is a valuation gap. So we are seeing that Swiggy is right now trading at around 8.4 times sales at 95,000 crores. Zomato is at 205,000 crores. So the gap is around 50-53%. At its you can say listing, the gap was around 60-65%. I don't know what sort of a discount the street might give to Swiggy, because Swiggy is a completely loss-making company, but the second largest player in the industry, and the losses are curtailing. Let's see how the December number pans out, but I don't think that the gap would widen much. I think if Swiggy comes out with decent enough numbers, I see Swiggy bottoming out around 400, 390 levels. At was which was the lows recently, and then the stock started to perform really well. Swiggy hasn't come out with any statement as yet, and let's see how the after results the commentary would be. I don't think the commentary would be that strong with the respect to the food delivery, etc., because we are seeing a slowdown. So I believe that Swiggy might trade at 60% discount to what currently uh, Zomato is doing. So 205,000 crore, Swiggy might trade at 84, 83,000 crore market cap. That is a fall of 10-12% from here. So around 380 would be very interesting for somebody to get into something like a Swiggy. Again, I have the stock at higher levels, so that's a disclaimer. A similar kind of business, and I believe that these two companies would remain the leaders, say 1 year, 1.5 year down the line. So over the next 2 years, if you have a time frame of 12 to 24 months, 12 months, ideally 24 months, then these are decent levels to start accumulating, both Zomato and Swiggy, and probably at lower levels, 10-12% lower from these levels. One can definitely look at it seriously, look at these companies seriously, because this is the kind of business that has only begun to take shape during the pandemic 2020 2021. This is not a kind of business that we talked about, the HULs of the world, or Britannia or Dover, etc., and all that has been in the business and in this industry for the last 30 40 years. This is a kind of business that has been uh, flourishing for the last 4 years and has been in the picture for the last 6 7 years only. So I think this is where major part of the revenue mix for India diaspora, especially the urban sector India, which goes to work, etc. And now more and more people are avoiding cooking, and many other factors are playing in, long hours of working, etc. I think overall next 2 3 years could be big for these companies, uh, irrespective of the competition. The pie is big, so I believe that eventually we will end up making decent amount of money. And why I'm emphasizing on this is these are not small cap companies. These are not companies with less than 10,000 crore market cap or even 20,000 crore market cap. Swiggy is 1 lakh crore market cap. Zomato is 2 lakh crore market cap and having decent amount of sales. So in terms of Swiggy, we have yearly sales of around 8,000 crores. Uh, I think 11,000 crores in March 24, and I think this year they should end up doing somewhere around 13 to 14,000 crore. 14,000 crores of sales for this company, 21 22,000 crores of sales for something like a Zomato. So these are large organizations that we are talking about. I don't see 50 60 70% declines in this stock. Swiggy is already at around 420. If you see from 620, it's already down 200 rupees from the top. Similar has been the fall in Zomato. So both Swiggy and Zomato are down with the same, you can say, percentage. I think if they are down 40% from the top, those are very decent levels to get into. So this one video on both these companies as well as the markets. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.